But I do want to bring in Peter Schiff from Euro Pacific Capital. Always great to have you on the show. Peter, let's just dig right into it here because we've got a lot of things that we're watching. Obviously, we're watching the Fed. We've also got the 2Q GDP number coming out and big jobs number on Friday. Out of all of those things, which is going to have the biggest impact on the gold price?
Well, potentially the GDP number. I think the job numbers have been hard to, get your arms around because they're so distorted by so many people taking part-time jobs. It kind of obscures what's really going on. The second quarter GDP number, everybody is looking for a big number, or at least 3%, as somehow it's going to validate the fact that Q1 was just because of the weather. But, even if we get 3% in Q2, about 2% of that is going to be the bounce back that's related to the cold weather from the first quarter. So if you strip that out, even if we get 3%, the real economy is 1%. So it's much, much weaker than the consensus. And I think Q2 is going to be the high water mark for the year. I think it's all downhill from here. And it's not, we might not even get 3%. We might get less than that. And so that could be bullish for gold.
All right, so that is the bullish thesis, but on the downside thesis, we had Yanni Jacobs on the show. He actually correctly called gold's demise and said that gold is going to 700 at this point. He also made some comments about your gold thesis. I want you to take a listen.
I think Peter, he has some, great arguments of why we should be concerned with the global economy or with the U.S. economy. But when it comes to what is the solution, I don't think that buying gold is going to be your solution. I don't think that gold is going to be your safe haven and your savior if that does happen.
Peter, thoughts, comments, reactions?
Well, most of the people who have been calling for the demise of gold, I'm not familiar with this individual, but they've been doing so for the past 15 years. So, talk about broken records. The gold critics have been the stop clocks. They keep saying it's going to go down, it's going to go down. And gold has bad press. You were talking earlier with Ron Paul, and you said gold has had a tough year so far in 2014. No, it hasn't. Gold is doing better than the stock market in 2014. So how is that a tough year? You mentioned it's up 8%. That's for the first half of the year. That annualizes out to 16%. Most people would like to get a 16% return annualized. So that's not a tough year. It's a good year. It's going to get a lot better. And, you also were talking about the strong dollar. The dollar ain't strong. The dollar index is at 81. That is not a high level. It was at 120 in the year 2000. So it's lost a third of its value measured against the currencies in that basket. But if you actually look around the world right now, foreign central banks have been picking up their dollar buying. Look what's going on in Hong Kong. All these central banks are having to buy lots of dollars right now to prevent the dollar from collapsing. So if the dollar were so strong, why do so many foreign central banks have to rush to its rescue to prop it up?
Right. Well, you mentioned the bears in the gold trade certainly sounding like a broken record. Sometimes the bulls can sound like a broken record, too. I'm curious if you still think that we're going to see gold 3,000, 5,000?
Well, I don't think it's a broken record. Gold has gone up every year but one since the year 2000. So if you've been calling for a rise in the price of gold, you've been right every year except one. So that's not a broken record. That's just understanding what's going on and predicting a higher gold price. It's the people who have been calling for gold's demise every single year who don't understand the fundamentals. And of course, when they finally get one right by accident, you finally get a down year, then they're rushing to claim victory. You see, we told you gold was going to go down. It's not going down. No market goes up every single year, and it's impossible for me to know when you're going to get that down year. But I know what the trend is, and I know what's driving the trend. And that's the central banks, particularly the Federal Reserve, and they're meeting now, and we're going to get another statement coming from the Fed. And there are some people who think maybe the Fed is going to sound a little tougher because of inflation. They're not going to do that. They're going to downplay inflation. They're going to continue to deny the growing inflation problem because there's nothing they can do about it. There was an op-ed in the Wall Street Journal about, is there a danger that the Fed will be too low for too long? That danger passed years ago. That op-ed is at least 4 years too late. They have already been too low for too long. There is no way out of this mess. And anybody who's calling for the Fed to stop QE now and raise interest rates, they're making the right call, but they're wrong if they think the U.S. economy won't actually do it. The stock market will collapse. The housing market will collapse when the Fed raises rates, which is why they're not going to do it.
Okay, Peter Schiff, always a pleasure to have you on the program, and I do mean that from the bottom of my heart. Peter Schiff from Euro Pacific Capital. Meantime, I want to trade gold. Jeff Kilberg, what do you think?
Well, I think he was fired up. That was fantastic. And I don't think this is a gold bull and a gold bear fight. It seemed more like a cat fight, right? We're at 1,300 here in gold, and there's a lot of people scratching and clawing. But right now, the way the world is, the geopolitical tensions, you have to be a buyer of gold here. I think that's the prudent way. There's no reason to sell it. And keep in mind, let's rewind just to the last Fed meeting stud. What happened the next day when Yellen said a little inflation noise? Bam! $50 higher. Yeah. So I think you want to be a buyer. I want to buy it at $12.98, looking to go back up to $13.28. Just a $30 move, Jackie. I'm not greedy here. I'm not looking for a lot. With a $15 stop below, $12.83, cut bait and run for the hills.
Yeah, I like owning gold here at $1,300. I hold about 10% allocation to gold in my portfolio here, and I like that level right here to get in because I think if you look at $1,300, the dollar's been strong, yet gold has really hung in there, and it's held in there very, very well. So I think you can be in there. Hey, 8%, you know, like Peter said, over the last 6 months. I know that doesn't mean you get 8% again the next 6 months.
I know, right.
But I like owning it here.
It hasn't been a safe haven
buy.
trade. We haven't seen a safe haven trade. And it seems like the rhetoric coming out of Russia, Ukraine, Gaza Strip, whatever geopolitical tension you want to pick, it seems like it's ramping up, not going down. So therefore, I think gold, you will see people buy in. But until the stock market really rolls off, no one really wants to own gold decisively.
All right, guys, let's go ahead and bottom line the trade and bring the show home. Jeff is buying gold at $12.98, targeting a move up to $13.28. Since each point in the gold trade is worth $100, this trade risks $1,500 to make double that. All right, that's going to do it for today's show. My thanks to Jeff and Brian, as always, from the CME. And, of course, remember, if you missed any portion